All right, welcome. This is the weekend video. This is Enda here. This is bullwaves.org, the weekend Elliott wave update. What you're looking at is the website. If you're interested in what I do, check out bullwaves.org and check out the membership. And if you want nightly Elliott wave analysis, that's where you will get it. Okay, those of you who have been around know what I'm going to do next. So without further ado, let's move on to. Let's move on to the charts. I'm going to go through the dollar FX first, and then I'm going to go on to stock markets, precious metals, crude oil, so on, so forth. You know the drill. So let's get started. I want to actually start on, as usual, a weekly chart. Well, not as usual, but for a change, I want to start on the weekly chart in euro dollar. And this is the new updated, as I was speaking last week, the triangle in wave B. I was long pursuing this triangle pattern in wave B, but that did not materialize. Obviously, we got a break of that internal low here, that 106.26 or 106, whatever it was, 20 something low, and that ruled out the triangle. Now we are hanging just below that low, so that has opened up the alternate count. So the alternate count, I was looking for a rally back towards that 120 level, probably 118 to 120 if it was a triangle. Now I'm looking for a rally probably back above 125, maybe even up to about 130 if this count is correct. So you can see that we just went from a large kind of, let's say, asymmetric bet to a very large asymmetric bet. So it just seems to me that the euro is, no matter how much I don't like it, even I will admit that we are at historic oversold levels here. We have sold off so rapidly, and we are back at a kind of a long-term support here. The pattern seems correct. The only caveat I have here is, are we actually already moving into wave C down? But I really don't think we are, to be quite honest. I think we're going to continue the kind of ping pong ball back and forth between the euro and the dollar until the euro basically gives up, probably in a couple of years' time, or in a year, maybe, whenever we finish this wave B correction higher, and then we move into wave C. That'll be pretty much the end of the euro project. But at this point, I think we'll continue this kind of range until we complete wave B, but I think there's a rally coming. I would have, initial kind of targets at 125.50. So that'll be a break of the wave A low, or A high, forgive me. Okay, so overall the pattern is 5 waves up in A. We've got 3 waves down in B. We've got a full trend channel. We've got a pretty, standard oversold level on the weekly chart. Daily chart, it's more oversold. 4-hour chart, it's already, rebounding. But we've got 3 waves down. We've got a complete pattern, I think. Maybe there's another low left, I don't know. But we are at long-term support here, and there is the expectation of a C-wave rally, so don't be surprised if that happens. Okay, so go to the 4-hour count here. You can see we've got numerous trend channels now filled. So we've got this longer-term wave C pattern here, and that's the trend channel, long-term trend channel that's surrounding that decline. That's already been broken to the downside, and we've got a consolidation around the lows. We have the shorter-term trend channel, you can see here, already filled. I'm not sure if this is 5 waves or 3 waves. I don't know, quite honest. I don't think there's a whole lot more to go. Maybe we do get another step lower, but I'm looking at the short-term count here. There's a possibility that we have a 5-wave pattern beginning in wave 5 of C of B. Now there's a breath. There's a mouthful for you. Maybe we do. But maybe we already have failed 5th wave. Maybe this internal overnight low here is a failed 5th wave. I think if we break above 106.40 again, that will probably bring that idea to the fore. For the moment, I'm going to allow for 5 waves down again in wave 5 of 5. So the outlook, we'll see how it goes. We didn't get that rally that I did expect this week. Basically what we did is we filled out another upward trend channel, so correction upwards, and we sold out of that pretty quick. Okay, the idea being we have to finish this long-term decline pretty soon, and I think then it will be a very favorable, let's say, balance of probabilities towards euro and a rally in euro dollar. Okay, let's move on. Here is cable 4 hour. We plunged again this week. A pretty impulsive decline. It kind of warranted another look at the previous pattern in wave 3. So we've got this 5-wave decline in wave 3. So we've got a wave 1, 2, a 3. I think we could look at this as a running flat wave 4. So an A, B, C wave 4. And then a 1, 2, 3, 4. Pretty standard 3 waves up. And then a plunge out of that 3 waves up into a 5. So we've got 5 waves down in wave 5 of 3. Maybe a reversal starting now. I don't know. We've got that. There's a pretty standard 3-wave correction. It ends up being a zigzag correction upwards. I was kind of touting, the idea that this was a more impulsive looking pattern than the euro dollar off that 124.11 low. That turned out to be false. It was a head fake basically. We've got 5 waves up, 3 down, which kind of led me to believe that we were maybe beginning a rally out of the lows, but we got 5 up again in just to complete an ABC pattern up, and then a plunge out of that. But what you can see here is 5 waves down again. So we've got 1, 2, 3, 4, and 5 into the low this morning. We've got, what have we got this morning? 122.76. Let's go to the weekly chart here, and we'll show you where we stand here. We are now probably, we're at the third lowest. We're trading at the third lowest low in cable for the last, where do we go back to even get that again? Oh, before April 98, that's as far as my chart goes back here. Before 98, so God knows how far before 98 it took to get back to this low again. So we could have a reverse head and shoulders beginning here. I don't know. But at least at this point, I'm expecting probably 3 waves up in a 4th wave. It could call into question the larger B wave count if this does turn out to be a reverse head and shoulders and we rally again. I don't know, but we are pretty darn oversold now at this point. You can see on the 4-hour chart we've actually, we reached extreme oversold in that wave 3 plunge, and now we're back to kind of, let's say, neutral territory again. So maybe a low forming. The patterns suggest that maybe we have a low forming in wave 3 and we should expect a rally in wave 4. That rally in wave 4 should probably bring us back towards 129, 130 again, maybe. So not an insignificant rally, but it should be 3 waves up. It'll probably be quite choppy, or maybe we'll just consolidate sideways in a triangle. I don't know. At the very least, I think we've finished 5 waves down, possibly in wave 5 of 3. So maybe a 3rd wave forming a low right now. So we'll see how that goes. Okay, the ever-present problem. The ever-present problem that is dollar yen. The market I wanted to rally for so long rallied, and now when I'm looking for a correction, it won't correct. Okay. Here's a daily chart. I think we've got 5 waves up. We've got no sign of a reversal just yet. The daily count seems pretty full. 4-hour count into wave 5 seems pretty full. The hourly count may be suggesting a possible further 5th wave extension in wave 5. It's kind of like, how would you say? What's the best way of describing this? I think the hob is turned off. I think the heat is pretty much off, but it's probably still dangerous to put your hand on the hob yet, because I don't know if this rally might, explode to the upside again. We might just get burned. So the reversal pattern has not formed yet. We've got a series of two corrective three-wave moves followed by a rally, three-wave down followed by a rally. We should break out to a new high. 131.25 would be the minimum level there. We'll see whether we get a reversal off that again. I suppose the one kind of redeeming feature here would be the idea when we get, how would you say, within the structure or an Elliott wave structure, when we get shoulder after shoulder, that means, even followed by a rally, if we get a shoulder after a shoulder, it usually means we're at the end of that move because we're getting a series of fourth and fifth waves kind of panning out. We'll hit a top and then we'll reverse. So I don't know. I can't pick out any top just yet. We'll see how we trade next week. I'm going to leave it at that because I've dug myself into a corner of in dollar yen lately. So I'm just going to let the markets do what it's going to do. Okay, here we go. This is the Dow. We had that kind of historic, let's say, well, not even historic, but it was a sizable one-day rally the other day after the Fed announced nothing that nobody didn't know already. But I suppose it might have been just a technical rally, a clearing rally. People were geared for anyway, or that, no, I'm not going to say people, that machines were geared for. And the more that this goes forward, the more that I am becoming convinced that we are building a bear market, the beginnings of a bear market here. So, if you're sick of hearing me speak about this, you can probably switch off now. But a series of 1-2s is what I'm going with here, a series of impulse waves to the downside, followed by another impulse wave down. So we have more or less retraced all of the rally that we did, or that we saw, in March. That does suggest that something larger is brewing here. And maybe it's time to get out of the way before you get trampled by it. But we have, I think, another 5-wave pattern lower to begin, wave 3 down. So 5 down. That rally this week was part of a 3-wave rally up, and then it got sold out completely pretty quickly yesterday. So you can see this is, this is algorithmic trading at its best. This is completely automized trading. Some sort of a news item hits, the algos go mad, they buy, they hit a kind of a technical top, or they read momentum has peaked, or maybe the front runners have they see the order flow has stopped and they sell immediately the next day. So this is just this has got to go. Algorithmic trading has got to go. I just hate the way that the market is front run the whole time by these big banking institutions, these big hedge funds, and God knows what sort of feeds they have coming out of the New York Stock Exchange. And I just hate the idea that pretty much you're just being robbed blind, basically, if you are trading the market. If you're a little guy, you're trading the market like me, you're pretty much robbed blind the whole time. So, they know what you're going to do before you know it. And they're already taking the other side of the market. So anyone who bought into that, historic rally got pretty much, wiped out yesterday. All we're doing this morning is we're consolidating at a low. It could be a second wave low. I'm looking for a third wave decline probably next week, maybe even starting today, but it looks pretty impulsive what we got yesterday. Wave 1 of 3 maybe. Yeah, I think that's probably where I'm standing right now. So we could have a series of third waves, that kind of waterfall motion that I kind of I beckon to, or I go back to on my nightly reports. That waterfall motion is coming. I think, if I'm correct here, we have a Fibonacci target probably coming in below 30,000. So I'm looking at 29. What's that? 29,600 or 29,500, and that would probably serve as support for a third wave down. That would be quite a plunge, and maybe some sort of consolidation after that in a fourth wave. But we've got wave 1 and wave 2. The Fibonacci extension is is suggesting, a break of 30,000 again for wave 3. So, talk about 29 when we start seeing, consolidation down around 29,000. And I know I'm kind of getting ahead of myself here, really, but this week's trade has kind of reinforced this idea here, and that's where I'm looking. Obviously, if you want the up-to-date charts, you get onto the website and join. So what are we looking at today? Possible 1-2 building. Maybe we get a lower consolidation again in this lower degree second wave, and then next week we'll be looking for a third of a third of a third decline. So that's the Niagara Fall or the Angel Falls type of moment. So watch out. Okay, we'll see if it happens or not. This wave 2 high at 34,000 is pretty much got a hold now as this pattern builds to the downside. So we've got a pretty solid kind of resistance top in place, which shouldn't break. We've got a pretty solid count that's building off that, and we have a series of, let's say, a larger target that is kind of looming ahead of us down below. So okay, I'm pretty much done with that. It's time to move on. You know what I'm getting at. Here we are. This is gold. This is probably, my most attractive pattern right now. I think, here's the 4-hour count. I think we could be looking at a third wave rally coming our way pretty soon, as long as, we've got 1780 here as a kind of, let's say, absolute no-no, must not break for the bullish pattern to hold. But we do have 5 waves up into wave 1. We have a probable 3-wave pattern almost complete down off that. We've got a trend channel pretty much, well, nearly full. We've got a C wave that is approaching completion. We've gone into the hourly count here. Well, anyway, on the 4-hour count, we've got already a bottoming out on momentum. I don't know if we'll test the lows again if we see a 5th wave decline, but we may well do. But in any way, or in terms of, let's say, suggesting a correction is completing, I think we're pretty close to that. We've got a momentum reversal probably building off the lows here, so we'll see how the short-term pattern builds early next week. We could have one more test below 1850. I'm looking at 1818. That's my A equals C target. So this is where wave C in blue here. Wave C will equal wave A at 1818. So that's kind of where I'm suggesting this C wave will come to a close here. We possibly have 3 waves up in wave 4 into this week's high, and then we have a pretty impulsive looking reversal off that. So maybe a 1-2 pattern building today. Third wave decline would see a break of 1850 again, and 5 waves down we'll see a test of 1818. We've got that 1780. How would you say? Must not break. Very key resistance or key support here at 1780. But once we do get wave C done, I think we will. I'm looking more and more positively at gold right now. Okay. Just keep an eye on the nightly charts. Obviously, we're coming to a low, I think, in gold according to this pattern. And if this pattern is correct, it'll be a very opportune or very, let's say, tasty opportunity to pick the lows here at about the 1800 level, 1820. Okay. And if you're buying, if this pattern is correct, and you're a physical buyer, between here and 1820, it probably doesn't matter a whole lot. You could probably start picking pretty soon anyway. But if you're just trading it, if you're leveraged and you're trading it, it does make a big difference. So, take your pick on that one. Okay, let's move on. This is crude oil. I have been looking at this. Well, this is an alternate account that I brought out this week. I have been looking at the possibility of a wave C rally. Where are you going? A 1-2 pattern off the high, so we've got wave 1 down. wave 1 down, and wave 2 up building. Okay, so wave 1 down, wave 2 up. That's the suggestion here. I think we may have, we're very close to, let's say, confirmation of the C wave bullish pattern here, but this week has kind of raised a couple of ideas. So, you know, this alternate count here is not out of the, let's say, it's not out of bounds at all. So maybe we have a triangle and a fourth wave, and then we have a fifth wave rally coming our way pretty soon. Now, I'm going to go to a more interesting, in the short term, I'm going to go to this more interesting alternate here. And that is that we have wave 1 down in green, done. So we have wave 2 blue already complete. Let's scrunch this up a bit here. Wave 2 is already complete, as per the alternate. We've got a wave 1 down in green, and we've got an ABC pattern building in wave 2. So the reason I brought this up again this week for the guys on the website is because we've got, let's say, a challenging kind of series of retracements happening here. While they are not invalidating the overall pattern, they are surely making it harder and harder to remain, let's say, unabashedly bullish here. So the more that this market tends to punch to the downside, and the more of these wave 1 highs that we take out, the more likely that this initial alternate pattern is correct. So this ABC pattern up. We do have the bare bones of that pattern now in place. It remains to be seen whether this actually, gets triggered or not. But the crude oil does seem to be hitting some sort of, resistance at around this 109, 110 level. And we are not accelerating as I thought we would have in wave 3. So I'm keeping this an open mind on this alternate count here. As for the main count, if we do spike higher again today and we do start pushing out above 112, 113, then that'll pretty much confirm the more bullish count. Well, it's not even more bullish. Not a whole lot more left in it anyway, but it will, let's say, lean in favor of that larger wave 2 in blue here. And that's what I'm looking at. So crude oil kind of hanging in the balance here, I think. And by the way, if we do get, like, as I spoke about in the stock market, if we do get that third of a third decline, as I'm showing here in the S&P, that third of a third downdraft, that waterfall moment, that'll pretty much drag every market with it. So, we have to remain, at least a little bit vigilant here, even towards precious metals, because that downdraft will take everything with it, and cash will be the only thing that people will want. It'll be the only thing that people will want, probably short-term bonds as well, and it'll be the only thing that people can't get. So I'm just saying, maybe keep your powder dry there, because people might want that very soon, especially if we get a third of a third decline. Okay, here's the S&P. This is a 4-hour count. As you can see here as well, I'm looking at this wave 1 and 2 pattern here. We've got a full retracement, basically, of, well, not a full retracement yet of wave 2, but a full retracement of that spike rally out of the FOMC meeting. So the idea being here that we are possibly beginning that third of a third wave decline, which is it should send shivers down, the spine of all those who, let's say, attest that the market only goes up, because you'll probably be saying the market only goes down in a few months' time. Okay. Far be it from me to suggest that there is something sinister going on within the walls of the Fed, but I do believe they do want to tamp down inflation, and I think they will get it in bucketfuls. I think they are on the verge of unleashing outright deflation, and if my longer term patterns are correct, well, let's go to the daily count here. this is the daily count. If we've topped out in this wave 3, as per the longer term chart, then I don't see any reason why we don't break 2100 again and maybe even continue. So watch out, be careful what you wish for, because you might just get it in spades. Okay, so let's get down to the short-term chart here. Here is the possible wave 2 in green high. We've got a wave 1, ABC up in wave 2, 5 waves down in wave 3. I've lost my wave 3. Where are you gone? Here we are. Okay, 5 waves down in wave 3, 3 waves up in wave 4, and 5 waves down again in wave 5. So we have a 5-wave pattern lower in wave 1 complete. We've got an ABC pattern up in wave 2, and we've sold out of that we've sold out of that rally pretty quick yesterday. So the idea here is that we have wave 1 of 3 now underway. And if that is the case, maybe we'll get a break of 40.63 again today. That'll be the wave 1 low, so maybe we'll test that low again today to complete wave 1 down, then get some sort of a small consolidation in wave 2, and then next week we will look for that third decline in the S&P as well. And that remains the base case scenario here. And if this happens, well, all bets are off for crude, all bets are off for reversal in the dollar as well. But I'll remain open, because initial knee-jerk reaction suggests that people will just run to the dollar and they'll run to US bonds again. Okay, which would suggest that right now US bonds are probably very much oversold, and you might be witnessing some sort of miracle revival in the 10-year over the next few months. So that's just, a quiet suggestion. When people hate things, maybe that's when you should probably start looking at them. That might go along with my view on euro as well, because people do kind of hate the euro now. So maybe the euro will rally along with a collapse in the stock markets. Okay, here we go. I'll move on. That's the S&P is the outlook is for a third decline. We'll be able to update these charts tonight, obviously, with today's action. The market hasn't opened yet, or it's on the verge of opening, and we're pretty much flat. We have not retraced back up any of the losses yesterday, so we can probably count that wave 2 as probably in the bag, and maybe we'll get a taste or a test, let's say, of 40.60 again today. And if we do, that'll pretty much confirm wave 1 of 3. And then, it's another kind of rung on the ladder towards that, cataclysmic day on the markets when we get a third decline. And by the way, you can kiss your housing market goodbye if this comes in as well. So, all right, here we go. Here's the count in silver. I am open to the idea that we have a third wave. I know this is not the short-term count, but I am open to the idea on this 4-hour count here that we have a third wave down already complete, or we are completing it pretty soon. And if that's the case, we'll probably get some sort of consolidation in wave 4, maybe back towards $23, $24 level towards next week, and then that final decline in wave 5 will come. Let's get into the hourly count here. Well, I suppose I should explain myself. I am looking at a 5-wave decline in wave C to complete wave 2, and overall I'm looking for a decline at a minimum below 2140 and a maximum probably down towards 19. So that's what the pattern's suggesting. That's where my mind is still looking. Okay, move on. This is the hourly count. You can see a possible third, fourth, and maybe a 1-2 today. We've got 5 waves down into the 2211 low, and we've got probably a corrective rally overnight and into the early market this morning in wave 2. So maybe we get a third of wave 3 of 5 decline today. So we break $22 today. That would probably confirm wave 3 here of wave 5 is already underway. So watch out for that. I would suggest that this 23-27 level will probably hold now for the foreseeable future, at least until this larger degree wave 3 is done. If it is the case that wave 3 in red here is not complete yet. Okay. I think we'll move on. In expecting a fifth wave decline next week, I think is the best way to round that up. I'll note tonight whether this wave 2 is actually complete here at the early morning high. So we'll see. Keep an eye on that one. Okay, go to Bitcoin. This week in Bitcoin. Let's say, a running joke in my mind. Let's say, okay, I think even though, I remember, back in what was it? In late March, I suggested that we had a 3-wave pattern up in wave 4 done, and we were expecting a fifth wave decline. We're not done with this fifth wave yet. I had thought that maybe we had a let's say an ending diagonal low in wave 1 completing this week, but I think the market pretty much pulled that rug out from under us yesterday, and I have now switched to the most bearish of most bearish counts. So hang on to your hat for Bitcoin, I think, over the next few weeks, because I think it's going to get pretty painful. If we are in a third wave, let's say downdraft decline within wave 5 of C, that third wave decline will probably take us below at least 3,200 or 32,000, sorry, and possibly even a break below 30,000 again to complete an elongated or an extended third wave down. And at that point, who knows how low wave 5 of C can go. If we go out to, let's say, the daily chart here, and this is the daily count that I've been working with. Let's move you. Okay, here's the daily count I've been working with. The third wave decline of wave 5, if that's underway, then we have a fifth wave decline, which will likely break 28,000, and may even go down to the lower support, which is down at around 11,000. So, everybody, you might poo-poo that that suggestion at your peril here, because way back in when was that? November last year, I was suggesting we had 3 waves up in a B wave. We were punching out to all-time highs, and all anybody could see or say was that we had $100,000, Bitcoin coming our way. And here we are, a few short months later, and we have a full-blown C wave decline underway, and we're now pretty much halfway. We've retraced half of that, top dollar ticket price up at the top there. So I'm not sure we're done yet. Going by the action this week, it doesn't suggest that we're done yet, and I would be looking at that 28,000 level at wave A at a minimum for this C wave to complete. I'm going pretty deep into Bitcoin here, but I do think that we are in a danger zone here. Here is the short-term count that I'm looking at. A possible wave 1 and 2, or you could take this low here as wave 1, depending on how you, let's say, count that internal pattern here. If we do have a wave 1 and 2 done, then these declines off that wave 2 high is a series of 1-2s again. So we've got wave 1, 2, 1, 2, and then a plunge in wave 3. So it fits the bill. I don't think we're done. And if this is a third of a third of a third decline, we could see a whole lot more downside, below 30,000 before we see any sort of reasonable consolidation in a fourth wave. So watch out for that. Watch out. I'm going to move on to the NASDAQ. There's a 4-hour NASDAQ. looks like we have a second wave complete, and we're moving down into a third wave as well. Overall, I'm looking at that wave 1 and 2 pattern. Obviously, back at the end of March, everybody thought, the tech wreck was over, and what do we do? Just roll over again into a third wave, and now we're actually back below the previous February lows. So, are we moving into a third of a third or a fifth of a third? Let's see on the short-term count. At this moment in time, I'm looking at an acceleration into a third wave, third of a third coming our way, and let's say the action this week has not disproved it. It's actually favored that wave count now. So, if earnings continue to kind of look, forward earnings, let's say, continue to look bleak as they have been, and the pattern continues to build to the downside, then the momentum may just continue to build, and it would again suggest that we have much more below us than above us. Okay, let's go to the longer term chart here on the Nasdaq. If we're looking at a fifth wave top, then all we're doing, we're heading right back to those February 2020 lows. So that's that's a halving of what we've got here at the current levels. So we've rallied to an unprecedented highs out of the, let's say, the pandemic decline, and there's no reason to suggest that all-time high was not the peak that we will see for a long time ahead of us. So if my bearish predictions are correct, then we have much more below than anyone is willing to consider right now. So again, watch out. If this count is correct, tech is not your friend, and it won't be for a long time to come. Okay, I think that's it. I think I'm done. Thank you all for watching. I think that was a pretty long video. As always, I always end with the good news. If we have rolled over into the bear market of bear markets, then you're going to be clinging to your hat. Your perceived wealth is going to be disappearing in front of your eyes. You're sitting in a house that's valued at 300, 400, 500 grand now, and then in a year or 2 years time it'll be 100, 150, and you will not be able to find a seller or a buyer. Sorry. So it is at those moments when people start to turn and look to the eternal rather than to the dripping sand between their fingers, as this life is. The hourglass has turned on everybody, and we only have so much time left. We do not all have a long life ahead of us. We precariously walk along a cliff edge that is called eternity, and we can step off that cliff at any moment in time. You don't know the day nor the hour that you will face the Lord. You don't know the day nor the hour that you will face your judgment. And if you face it in your own righteousness, clothed in your own filthy rags, then you will not be accepted into the kingdom of heaven. You must face the Lord, your Creator, with the righteousness that He provided for you. That is the righteousness of the Messiah, the Jewish Messiah. If I have any Jewish friends listening, your Messiah came 2,000 years ago. Read Isaiah 53 and read it and weep. And He paid for your sin. He's already paid for it. If you want to accept that free gift of eternity, there's nothing that you can give an almighty creator that, other than your allegiance, there's nothing that you can give to an eternal God. Only your allegiance. And the only way that you can give your allegiance is through His King and Commander, that is Jesus Christ, Yeshua, the Messiah. And there's only one way to admit let's say, commit your allegiance, and that is to ask for salvation. So admit, believe, and confess, and that's how you step out of darkness and into lightness. That's how you step out from being a child of Adam and being condemned to being a child of God and to be given eternal life. And that is what they call the gospel, the good news. The good news is you have eternal life if you want it. It's right there for you. And the only thing that you'll be thinking of if you do not accept it for eternity, all you'll be thinking of is, why didn't I accept it? It's a free gift. It's ready. It's sitting there for you. It's open to everybody. And I would ask you to consider it. Again, you're walking along a cliff edge. And every week you hear stories of people that die, so unforeseen and so quick and in their prime. And they had to face the Almighty God. And I just hope and pray that you will, accept the righteousness of the Messiah. Step from darkness into light, and I'll see you in heaven. Okay, that's that. Anybody who's listening right now, that message was for you. Everybody else has clicked off. Okay, have a great weekend. God's blessings to you all, and I'll see you next week in YouTube land. And everybody on the website, I'll see you later. Bye-bye.